Hello, and welcome to the December 2020 update for MLFX. This is number 6 in our monthly update series. Quite a milestone in itself, 6 months of doing these updates. Last month I neglected the video. There is an article, however, if you would like to check it out. Just being busy doing other things, / a little bit lazy and not putting in the effort to do the video. Was the case, really. But this month we have a video and we have an article. So I'm just going to quickly run through the article, maybe add a couple of points here and there on top of what we have. And let's just see how it goes. Now, this is obviously not the final version of the article because I've got no video here. So I've got just a reminder myself to add the video there. But in the lightning rounds in December, we reduced the number of agent rules from 100 to 20 rather. This should enable us to create more unique agents, in theory, because they're using less rules and they have to get less of them right. It's kind of complicated, but that's the general concept of why we're doing that, in conjunction with the two main points and things that we implemented this month, which was the Mactavator system, which I'll explain later on in the article, and Manual Dataset Selection, which is exactly how it sounds. We started tracking and recording activation levels of the agents throughout their training, as well as the signals themselves. This is something we probably should have been doing for a little while, but for whatever reason, it never crossed our minds, and we never got to actually recording them. So now we're actually doing that, and it's quite exciting to think about because there's a correlation between agent activation and the likelihood of that being a profitable trade, which makes sense if you think about it, because if you have a profitable agent, the more activated the rules are that it has, those 20 rules that we have here, the more of them that it finds within this given circumstance or when it tests the market. And if it's a profitable agent, the more likely it should be to win that trade. So in essence, it's really like how certain it is of that particular trade, the more activated it is. So we now are recording that, and what we'll likely do in the future is create these unique identifiers or labels that we will figure out at what levels or at what thresholds it is more likely to be profitable, and then we'll create like strong buy, strong sell, which is something we were previously doing, but we were doing it using other methods, and this is a much better way of implementing those indicators or strength labels to our signals. So that's exciting. There's plenty of potential there. As with a bunch of other stuff, there's so many things that we're excited to test and excited to do. Yet the problem is there's only so many things we can test at once, and Amari only has so much time in the day to implement things, seeing as he's still working full time and doing other stuff as well. So he's a very busy man, and we just are happy with what we get at this point in time, knowing that in the future we will have more of his time, and hopefully we'll be able to employ a couple of people to help him as well with development work. Then we worked on identifying why the creation of selling agents seems to be more difficult than buying agents. This is our main concern at the moment. This is what's holding us up from taking this to the next level, right? At the moment, it's hit and miss. Some months it's pretty darn profitable, like pretty good, as you'll see further down in the article. And other months it's losing money, or other weeks rather, it's losing money. So there is some issues there that we're trying to work through, and we're still to identify what the main, the main issue is that's causing those selling agents to just not be created at the same level as the buying agents. I also did some basic design improvements. I won't go over that, but the main one is this new menu at the top here, which I think looks much better than what we previously had, which is an image of it down up here. It's just a bit tidier, and yeah, I think it looks better. So Manual Dataset Selection. This is something that we needed in unison with the Mactavator system to work. properly. We wanted to be able to go in and have a look at the data sets, find two that looked relatively similar. The newer the data, the better, because generally newer patterns tend to produce more optimized agents for the current markets, or better agents for the current markets. And basically what we do is we use these sliders on the left and the right here, and we select within a given time period. I think we're using about 3 years of data at the moment, these two data sets for the creation and training, and then we just use the most recent 50 data points for testing, which is in essence just to give us metrics for the signals. There's no real purpose for that other than, I guess, if the metrics tend to improve, then we should it should mean that the agents we're creating are better. But we're going to likely implement a full back testing solution as well that will further to the left here. It will look at all of the historical data back however long we want it to, and it will trade with the system throughout that whole period, which would give us a more accurate representation as to how the new changes or new agents are doing in the market. Now, back testing is not indicative of future results, so we're not going to be using that to say it is a profitable system and you should invest or you should buy or whatever. We're not going to do that. We know that back testing is quite often bullshit, right? It doesn't mean anything other than hopefully giving us a direction or an indication if we're using the exact same data points to test and we're consistently improving the system, and then we go back and we mimic it, basically not knowing the historical data points. It's going forward one data point at a time, and it's trading, and if it performs better than the previous version, that should be an indication that we're onto something, or that what we're doing is actually working. So there's a couple of other things to manual dataset selection, and there's a few things we'll try in the future, definitely, but it is a step in the right direction. And what it allows us to do is it allows us to set a couple of thousand data points for the data set, which then in conjunction with the Mactavator means that we would have a maximum of a couple of thousand agents, because the Mactavator is looking at every single data point in that data set, and it is saying what is the most profitable agent for that data point. It's actually using these rules at the moment, but we will change them in the coming weeks, and in fact hopefully later today. So it must be the most activated at that data point. At the individual data point, it must be the most activated, which means it must have a higher activation than the previous agent. And generally that means, as I was saying, it should have a better understanding of the current market conditions. So on top of that, it also must have an equal or greater percent return for that data point. This is our current methodology. And finally, it must have a positive total return. So out of all of the trades it's taken, it must be profitable. So there's a couple of things that this should allow for, and currently there's some issues and it's not really doing it. But the idea is that we are finding the agent that's most activated, so it understands the current market conditions the best. It has a greater return at that data point, or it has a greater return at that data point, so it's got to be positive as well. And this means that we can have buying and selling agents, and it should be, if the market is going down, it's definitely not going to find a bullish agent for that data point if it goes down 50 pips or whatever, right? Because that would not have been profitable at that data point. So it could only add a selling agent or a bearish agent at that data point. And then by ensuring it must have a positive return, we should theoretically only add agents that are profitable, right? in the long run. The issues with this at the moment is that during training and the metrics that we're using to basically see if they fit this criteria, the metrics we're using are the metrics from training, and during training, because we're using EMAs, SMAs, other moving averages. For those of you who don't know, SMA is a simple moving average, EMA is exponential moving average, but because we're using things like that and RSI, relative strength index, they are always going to be activated to a certain degree, even if it's 0.0001, right? Now that's not going to be the case, it'll be activated more than that, but just as an example. And by always being activated, they will always trade during training, which is an issue, and we're going to resolve that. We have an idea as to how we're going to resolve that. So what we want to do is we want to make sure that they're putting their best foot forward. So by looking at that training, those training metrics of the agent, and then by saying at what point in terms of activation threshold, at what point was this agent the most profitable, and creating a function that goes at 1% intervals and incrementally increases it until it finds the most profitable or the highest total return for that agent during the training data set. That's what we're going to do, and that will make sure that each agent is putting its best foot forward, and that will allow us to create counter trend agents for data sets that might only have, say, 50 out of 1,000 data points that were bearish, right? But we'll still get some bearish agents for that data set, because you might find that there was an agent that was previously trading, and it was trading 950 times, right? It was trying to trade almost all of the data points, but it was a selling agent. So only 50 of those data points, maximum 50 of those data points, could have possibly been profitable. The rest would have been losers. Now, it doesn't take a genius to figure out that that would have been a losing agent, right? In the long run, that would have lost a lot of money. So by doing this, what we are hopefully allowing is that that agent would discard 900 of those trades, and it would only keep the 50 that were profitable. Now, it's not going to be perfect like that, of course. There'll still be some losers, but the idea is that it should be better. And then what that means is that we have more agents that are meeting the criteria for these rules, a more diverse range of agents as well. So there would be potential for more agents to be added to the agent pool, instead of it just finding, you know, the same couple of agents over and over, or it's really struggling to find certain agents to meet these criteria for certain data points. All in all, it'll just be a better solution. So there's a couple of other benefits for the Mactavator. So as I said, limited number of total agents, wider range of agents, and much easier to create counter trend agents. So funnily enough, I've already listed off all of those benefits. The next point is the beta results to date. I didn't cover any of these last month, should I say. But what I've done is I've added all of them since we started properly using this new system. I've added week by week the results, and this is week 1, 2, 3, etc. as the points, to illustrate that there has been massive improvement. Because you look here, some people might think, okay, the accuracy 26.92 drops down. What's the latest and greatest? 24.65. You haven't got any better. If you're looking just at that one metric, then yes. But average risk reward of 2.11, you can see 2.4, 2.75, 6.2, 4.3, 7, 3, 2.9, 2.86. So that has increased significantly, which is one of the main things we were looking to increase by using some of the improvements we made a month ago or so, which was to switching to using total return as one of the metrics that we use to optimize our agents. Also, I was not recording the most important things for these first 4 weeks, but the most important metrics we're looking to maximize is the basic return per trade, or the average basic return per trade, and average compounded return per trade. So we can see that as we've progressed, it's sort of going up and down here, going up and down. We have our first profitable week there, and then we have a very, very profitable week here with 0.115. 2 weeks where we didn't trade, or we didn't have the system up and running because we were doing some changes. Bit worse here, and the most recent week has been not so great. So why is this? Why is it chopping and changing, going up and down? How come we're not consistently getting better? As I said, we are getting better at certain metrics, and the average win risk reward is one of those metrics. Also, the average return per trade has consistently been improving. The reason for these fluctuations in the last couple of weeks is because we're having an issue with the selling agent creation, which is something I alluded to a little bit earlier. But the main issue there is possibly going to be fixed by that solution I was talking about, where we are putting the agent's best foot forward. But we're also looking at the agent logs. We made some changes to it to identify if there is an equal number of buying and selling agents being evaluated at any given time, right? So it should be equal. It is completely random, but that randomness should be roughly 50-50 in the end, right? Because there's only 2 options that it possibly can be. So we need to rule out possibilities here. Unfortunately, it's been a bit of a timely process over the New Year and Christmas period, as to be expected. But if we can solve that, then these fluctuations, right, going from 97 to negative 25, should become much more sensible, much more stable, right? And we should hopefully be consistently profitable with just that change alone, or just that solution alone. And I'm very confident that we will be, because you look at this, and this is a good week when the trend was generally bullish, because we only have really buying agents for about half of the pairings. So if most of them are selling, or most of them are bearish markets, then we're going to end up with a week like this, right? Or even maybe worse. But if most of them are bullish, then we're going to end up with a week like this. And if it's about 50-50, we'll end up with a week like this. So that's why we've got these fluctuations. Once we're able to create buying and selling agents at an equal level, then we should get even probably better results than this, right? We're aiming for 0.15 to 0.2, or 15% to 20% per 100 trades return, which I think is a good number for us to start things, right? A good number for us to launch with. And that is some really good, that's a really good return out of 100 trades. You can take 100 trades in a month if you're really pushing it, right? Trade 20 days, trade 5 times a day. It's 100 trades. 5 times a day is a little bit excessive for some people. So maybe you're only trading, 2 to 3 times, and it might take you 2 months for 100 trades. But if you're making 15 to 20% return on average every 2 months, times that by 6 for a year, you're making, could be 120% potentially. And I know that sounds excessive, and I know that sounds ridiculous, but realistically, with how things are going and the fact that we are testing at completely random times, right? There is no structure to when we test a market. It is going through a cycle. Each cycle is slightly different. Might take a little bit more, might take a little bit less. Roughly every, I want to say 13 to 20 minutes, depending on how many agents are in the agent pool, we get a new signal. And that signal is telling you to buy or sell. It is giving you a take profit, a stop loss. And if we can attain 28%, 30% accuracy with that average return per trade that I was just talking about, things are looking very good. Things are looking amazing, because all we need to do from then is we need to cherry pick the trades, or cherry pick the entries that we're taking, which is not something that's overly difficult. We just create another simple algorithm, and we change the the input data from using 1 hour data to 1 minute data or 5 minute data, and every 5 minutes or 1 minute we test the market, and then we find a pattern within those tests as to which ones are the most likely winners, and then those are the trades we take, or those are the times that we enter a trade, and that's how we increase. But there's so many other things we can do that will get us closer. As you can have guessed, because we were making all these changes, I was not trading with my live account this month, but I will start as soon as possible. So if you want to click on the My FX Book link right there and bookmark the account, by all means do. It was just a couple of quick bug fixes. I think there was a couple more than this, but very minor stuff throughout the month. And then I've already talked about what we were working on, so I won't bother spending any more time here. But that's us for the month of December. Happy New Year, Merry Christmas to all of those who are watching this video, which is probably a whole grand one or two, including probably one view from Armory. So yes, making waves. But if you do want to follow along as we develop the MLFX system, I think you should. Then you should subscribe to the channel. You should join our Telegram group, which is down the bottom of this article here, a link, and I'll put a link to this article in the description or in the comments below. But people, these positions for MLFX will not be around forever, right? As soon as we get to a stage where it's profitable, we will be opening up to 100 people. Then we'll probably cap it for a while. Then we will open up to another 100 people. Then we'll make changes, and then we'll likely increase the price, and then we will see. We probably won't open up to any more than 200 because we don't need to. At that stage, we'll have enough revenue coming in, and then we'll automate the system, and we'll have it trading for ourselves. So we'll be earning plenty of money. There's no point in us taking on more customers at that point in time. And then we'll work towards creating like a hedge fund or a quantitative firm using the system. So very, very limited spots, first in, first serve, and then friends and family pretty much. So the first 100 is probably just going to be anyone, and then the second 100 is going to be a mixture of friends and family and other people, because we'll be able to take it to them and say, look, you know, this is working, this is profitable, this is an opportunity. And obviously, because they're just lucky enough to know myself or Armory, they get an opportunity to sign up and to utilize the system. So, moral of that, don't miss out. Subscribe or join our Telegram just in case. And join the conversation. Let us know that you're interested and get in early. Righty, I'll see you in next month's video. Until then, keep an eye on the Telegram group. Keep an eye on what we're doing there. And yeah, offer any suggestions if you have any.